Today we're going to be looking at the ultimate leverage trading strategy, so let's get straight to it. Hey trader devs, I hope everybody's going extremely well. Welcome back to my channel where I take trading strategies that I find on YouTube. I code them in Pine script so that we can backtest them, debunk the bad ones and find a perfect trading strategy that works for us. Okay, today we're going to be looking at a trading strategy that I use personally every day, which is by a YouTuber called Kite Crypto. He uses an ABC pattern and a good risk to reward ratio to create a good strategy for leverage trading. Now the idea is that you're not looking for a humongous success rate, you're looking for a small stop loss because we're going to be leverage trading with high leverage, so you'll be able to put a very small amount of money into the entry, and you're looking for a big but a longer exit from the trade. So let's have a look at that on my computer. Let's go and have a look at Kite's channel and let's start coding the strategy. Okay, let's go. Okay, as always, giving credit where credit is due. Here we are on my computer and this is Kite Crypto's YouTube channel. Now I've been following him for quite a while. He's a much smaller YouTuber than most of the other ones that I actually have shown on this channel. But he, I believe, is one of the better traders that I've found. Okay, so the idea of Kite's strategy, let's go over to the charts and have a look. If I could just take 2 seconds of your time whilst you're watching the video. If you're enjoying the content, please don't forget to give me a big thumbs up and don't forget to subscribe for future content. You can also join me on Discord where we discuss all of the strategies. You can get access to all of these strategies down in the Discord, down in the links below. Okay, let's get back to the code. Right, here we are on a blank chart. Kite actually doesn't use any indicators themselves. He actually draws on the chart, so I'm going to do the same and then we're going to go away and look at how we could actually emulate this in code. Right, so Kite actually takes a ABC pattern of a higher high making a lower high or a lower low and then a higher high to get an entry. So let's have a look and draw that on the charts. It's very, very simple and he even sings along with it with an ABC. So we're going to take from the low here to the high where we are breaking the trend for a small pullback, and then we go all the way over to here and we mark our lower low, which would either be here or here, which would be here, and then we go all the way up to our new higher high. Now this could be called our FOMO higher high because that is where people are feeling that they're actually getting into the market at the right point, but it is not. So Kite here would have added a line here, which we're going to add here, horizontal ray, and if the price breaks below the blue line here, this is where he would have put his entry. So he goes to Bybit and then he puts an if statement order in. If the price belows, he will put a limit order or a market order, and he would have potentially earned over 10% here. Now he also uses the Fibonacci, which is the Fibonacci retracement, to do the 3 movements of the market here. So it's from the top to bottom here, and he would have either got out here at the 0.4. I personally get out at the 0.68 or to the 0.66. Okay, so that would have been giving us a potential trade here of around 4.5% on leverage, so that would have been quite good. You could have left it to go a bit further down as it actually even dumped to quite low here. So that's how we actually short the market. So how would we long the trade? Okay, let's remove these images here. Okay, the long in is the other way around. We'd go from the top here and we'd find our lower low here, and then we would go up here to our new higher lower high, but which is the higher high in this trend, and then we go and we'd mark our C here. Now this one would have either been here if it was lower, yes it was, and then we would have put a mark here where we would have got into the trade. Your stop loss would have actually been put on the lower low here, so you may have actually been pushed out of the market here, or you would have been taking the stop, but you would actually be able to get back in and capture all of this and not losing much money because, as I said, your stop loss is so small here. Okay, so let's add an entry here and we'll see how we would have done. Right, okay, we're looking for a long entry. We would have got in here and we would have literally done a stop loss at the lower low. So I'm going to zoom in here So on this new lower low here, you can add a couple of pips if you like, depending on what risk to reward ratio you'd like. This is a 9.3 and that one you would have 1. So as I said, that's a great risk to reward ratio if you're using leverage there, and your stop loss is only 0.48%. So absolutely brilliant as a stop loss. Let's go back over to the long again and do the long again so that we can have a look. Okay, I'm going to draw that very quickly again. So we're here up to around here and then up there. Okay, and we could have even put another pattern in here to get even better entry. He actually could add another pattern sometimes, which would have been around here to there, like that, and you could have actually got in here, so you can have a pattern inside a pattern. Right, let's start with our first pattern here and see what the risk to the reward ratio would have been. Okay, we would have got in here, and we're going to put our short like this, and our stop loss would have been much bigger here, so we would have done a 1 to 4 risk to reward ratio here. 1 to 4 would have only just about made it, but that's still a big win. Now if I would have put the second pattern in here, let me just add the second pattern here like I did earlier. There we go. Right, okay, we can add our new entry here. Now that would have given us a better to risk to reward ratio, so we can put our stop loss back where it was in exactly the same place, giving us a stop loss of around 1.5%, and we could have done a risk to reward of 4 to 5%, 4 to 5 here. Okay, and that would have been a winner as well. So as you can see, it's an absolutely brilliant strategy for leverage trading because you're not risking a huge amount of money each time. Right, okay, to back test this and to create the strategy, I'm going to be using the zigzag indicator that's going to give me the highs and the lows. The idea is that we're going to mark out the highs and lows of all of these zigzags here. If the higher is higher high and breaks below the previous higher high, as you can see up here, which would have been perfect. If it breaks below this, we will take our entry on the next candle. So that would have worked perfectly on this one. And back over here, this one would have been all the way over here before it's got its entry. So let's start copying and pasting that, and I'll get back to you with the results and also the code that I've done. Okay, let's start coding. Okay, let's very quickly scan through the code that I've done. As I said earlier, we've been using the zigzag indicator to, which I can't find here, the zigzag indicator to give us the higher highs and the lower highs and the higher lows and etc, etc. These are all plotted here. I've actually plotted them, as you can see here. You've plotted the higher highs using the plot shape. I've also created a new variable, which is the lower high price, which will give us this green and red line here, which is actually the previous high, so that we can mark it out. If we actually go below it, that is where we get our entry. We have our trend line, which gives us the trend to make sure that we are higher than the previous high. And then I have also added divergences, because Kite actually used to use quite a lot of divergences, so you can actually plot them quite easily on the chart just by going in here and going here and going here and adding divergences. Now this will add the RSI divergences here. You can hardly see it, but they're in the background behind all of this mess. Okay, so I'm going to remove them at the moment. Personally, I'd actually use this as more of an indicator than a strategy, but it's always good to see the back testing results because it's useful for knowing whether a strategy is good for future use. Okay, let's just very quickly go and have a look at the charts before going any further. As you can see, as I said earlier, this is where we would have got a longer entry here. Let me just remove that drawing there. And as you can see, the stop losses are extremely small. I have actually done this as getting the lower low here. And you can see that I've actually added a percentage of 4% here. You can actually take this even further and wait until the next indicator comes up and make more profit, or even using multiple exit points. This is just mainly for reference. The idea is it helps you to see these A, B, C patterns a little better, because they're actually quite hard to spot. I find personally myself in the chart whilst watching it grow along. Anyway, so this one here would have been our short, where we would hit the dump of Bitcoin. This is on an hour chart, so as you can see, the lower low, the higher high would have been this one here, and then we would have created another higher high up here, which it would have been too late for us to ignore. So we've actually got this one here, and we've broken down, and we got in quite well with a small stop loss again. Fantastic. Right, okay, here we have another one, which is a small win here, but very small stop loss. You can increase the win size, as I said earlier. Right, let's have a look at this strategy as it is. So if you were using this as a strategy and not a indicator to help you to find the entries, which I'd personally use this for, even using the Fibonacci to take your usual take profits. Okay, so as I said, we're not looking for a high profitable percentage, although this is a 36%, which isn't too bad. We're looking for a net profit, and this has an excellent 797% net profit on 225 trades. It's taken how many? 225, as I said, trades, wins 81 of them and loses 144. But you've got to remember that the stop loss is so small; they're very small losses each time. Net profit, as I said, a number of trades is 86 longs and 140 shorts. Maximum wins in a row was 8, maximum losses are 10. So as I said, the idea is to use a good risk to reward ratio. I actually use this with high leverage, even though you shouldn't play with leverage if you don't know what you're actually doing. Always be very cautious when trading. It is quite a risky game. So the idea is we get a small stop loss and we go for higher profit. Okay, I hope you enjoyed the video. If you'd like to see me live trade this, please give me a little comment down below in the description telling me what pair you'd like me to live trade, and I'll see you in the next video. Keep safe, guys, keep coding, don't forget to come and join me in Discord, and I'll see you on Friday. Have a good day, goodbye.